Hello again and welcome back to London. We're in a bit of a Euro limbo at the moment as we wait to hear what the Greek government has to say about its budget and whether the Troika will be convinced to give them the money that they need. Well, I've been speaking about the outlook for the common currency with Jemmeson from Global Reach Partners. Jamie, I am beginning to sound like a broken record. We have to talk Greece again. It's very much still what's driving the euro. Do you think we're any closer to finding a resolution?
Politicians appear to be making the right sounds at the moment. However, I do still feel that Greece is in the position where they are going to try and negotiate, and they are going to try and negotiate hard. Now, there has been some very contentious accusations obviously made towards Greece, and Greece-German relationships are probably at an all-time low at the moment. What does that mean? What does this mean moving forward? My general opinion is that we won't see a Greek exit. I think both the Greek creditors and Greece are going to continue to play hardball, but what will ultimately happen is when Greece is faced with the choice of implementing further austerity or expulsion from the Eurozone, they will take the cash at some point. And until then, we're just going to continue to see this played out, and it's going to be a long drawn-out process. But I do not think we're going to see a Greek tragedy. Yeah,
but isn't the crunch time next week? Because if they don't get that budget sorted, then they're going to run out of time within a matter of weeks, it seems.
But the goalposts keep getting moved. We saw it was crunch time last week, and it was crunch time the week before, and we've been playing this card for the last 6 years. They will continue to do whatever they can to try and keep Greece in the Eurozone. Greece leaving the Eurozone and leaving the single currency would be an absolute catastrophe for the region as a whole. You'd see the euro get sold off because this initial dream of the euro being irreversible would actually disappear. So they will continue to do what needs to be done in order to get Greece to a safe place. And it's just going to mean a lot of toing and froing, and unfortunately, as you say, it is like a broken record. We do continue to see the story brought up in the press, and that is going to continue to happen as well.
To concentrate on the broader picture for the Eurozone, because Mario Draghi in his last press conference was actually quite bullish about saying the recovery has now taken hold in Europe. And when you look at that data, particularly in Germany, aren't things quite positive away from the political elements?
Yes, I mean, Germany, they had the IFO data come out yesterday. Fifth consecutive month in a row it's increased, and the highest level since July. We also saw some very bullish German manufacturing data come out earlier in the week that was consistent of 2% growth as well within the region. In terms of how the actual net effect on the currency is, they're still going to be buying more bonds. My personal opinion is we are still going to see a weaker euro in the medium term, maybe not the short term right now, because there's other forces in play at the moment with regards to what's happening in the US. But we are starting to see some positive data from the Eurozone, but the underlying factor is still the ECB are going to be printing money, and they are going to be buying bonds.
Yes, so let's concentrate on that US side of the equation. Durable goods were weak, which doesn't really seem to make sense to me when we consistently get this good job data. So surely consumer confidence should be high.
I think the US is in a very strange place at the moment. It's in a transitional period. We saw patience get dropped from the language, and it's all going to be very data dependent at the moment. And if you look at the price action that we've seen with the US dollar of late, it's been very erratic and it's been very data driven. On Tuesday we saw the inflation data released from the US. It came out better than expected. We saw the core inflation, so if you stripped out the volatile items such as food and energy, it actually went up to 1.7%, which is a relatively healthy level given the economic climate that we're in at the moment. And we saw the dollar strengthen on the back of that. Yesterday we had a disastrous, as you pointed out, durable goods orders, and as a result we saw the dollar weaken off on the back of that. And I think until we see a piece of data that gives a clear definitive direction of what the Fed are going to be doing next, it's going to remain range bound. That piece of data actually could be next Friday with the release of the non-farm payroll figures. It's also coupled with Easter bank holiday here in Europe as well, so the liquidity is going to be low. So that could be quite an interesting piece of data. If we see another solid job payrolls data from the US, and another solid unemployment rate, again you could see the dollar strengthen up dramatically on that as June really does firm up as when they're going to start this lift off.
So let's talk about the euro-dollar situation. I want to put this scenario to you. So say we come Monday, Alexis Tsipras says he's got a deal with everyone in his government they're happy with. Jean-Claude Juncker says the European Commission's happy. Mario Draghi says he's happy. Surely that's going to give a big boost to the euro. I
think it will give a short-term boost to the euro. Obviously we've moved off the lows of 104, 105 level. We're now back at that psychological 110. Potentially you could see it move to the 112.65, which would be a technical retracement from the levels that we've seen. But I think in the medium term, I still think that euro dollar goes lower. I think it does go back to test 105 level. I think it does go maybe back throughout the year to test the parity level. I mean, you've actually got to still take consideration that interest rate differentials are going to come into play at some point. Now, one of the big aspects actually is that the US is definitely going to be raising interest rates. Everybody that's coming out from the Fed is talking about raising interest rates. The Eurozone is not going to be raising interest rates anytime soon, and in fact what you've actually got coming out is various members coming out and saying if inflation is not back towards target come September 2016, we are probably going to be extending the quantitative easing program, and then comes back to this supply and demand relationship where you see the euro weaken off on the back of that. So from my personal opinion, I still see a weaker euro in the medium term.
Well, thank you to Jamie. Stay tuned to Dukes Copy TV for lots more interviews and analysis. But from London, goodbye for now.